Welcome back to the Stocks Update. Lucid Motors LCID ended today's trading session with a notable decline of approximately 3.15%. During the day, its price reached a low of $2.30 and briefly touched a high of $2.41. Interestingly, when the markets first opened, Lucid was one of the few stocks that actually showed green on the screen. While most stocks immediately slipped into red territory, Lucid initially displayed some resilience and uncommon trend during these volatile times. What's important to highlight here is that Lucid was among the best-performing stocks on several watch lists early in the day. This initial strength suggested that investor sentiment toward Lucid was at least momentarily bullish, or at the very least, hopeful. Unfortunately, as the trading session progressed, the broader market's downward pressure proved too strong to resist. Lucid, like many other equities, was ultimately dragged down. The major culprit behind today's market turbulence doesn't appear to be any direct macroeconomic news, new government policy, or negative earnings updates from big corporations. Instead, the volatility seems to stem from ongoing tensions between former President Donald Trump and Federal Reserve Chair Jerome Powell. The back-and-forth rhetoric between these two influential figures has added an extra layer of uncertainty to an already jittery market environment. Trump has publicly criticized Powell's hesitance to cut interest rates more aggressively. In his opinion, Powell's actions or inactions are contributing to a lack of investor confidence. Trump continues to emphasize that the market would be in a much stronger position if Powell adopted a more dovish approach with monetary policy. However, it's important to note that the Federal Reserve operates independently, and many economists would argue that political interference in Fed policy could backfire. The result of this high-level spat: a significant exodus from traditional equities. Investors are shifting their capital into perceived safe haven assets like gold and Bitcoin. This flight away from risk has only deepened the sell-off across various sectors, with tech stocks and EV-related companies taking some of the hardest hits. Interestingly, Lucid hasn't released any company-specific news that would justify a major move in its stock price today. No new filings have been made with the SEC, and there haven't been any official updates from the company's executive team or investor relations department. This silence suggests that the downward movement is more a reflection of external market sentiment rather than anything Lucid has done or failed to do. What investors are now patiently waiting for is Lucid's upcoming earnings report. With no new announcements in the pipeline, all eyes are on the earnings call, which could offer deeper insight into the company's next strategic steps. Stakeholders are eager to hear how Lucid plans to navigate the current economic climate, whether any production improvements are on the horizon, and if the company will revise its delivery or revenue forecasts. Despite the market chaos, there was one piece of positive news for Lucid today: an updated analyst rating. Robert Baird & Company raised its price target for Lucid by an impressive 50%, while maintaining a neutral stance on the stock. While the neutral rating implies a balanced outlook, the significant bump in the target price was well received by some investors. It's worth noting that Baird had previously issued a $3 price target following Lucid's Q1 earnings release. This new update appears to be a more formal reiteration of that forecast, lending some credibility and support to the idea that Lucid may be undervalued at current levels. However, in today's unpredictable market, analyst upgrades, even substantial ones, can get overshadowed by broader market concerns. Unfortunately, we're currently in a market phase where technical indicators and short-term sentiment seem to outweigh fundamental valuations. Even bullish analyst ratings often fail to make a lasting impact when the broader market is dominated by fear and uncertainty. In this regard, it's not just Lucid that's under pressure. Tesla, which has historically been the bellwether of the EV sector, also faced a brutal sell-off today. Its shares dropped by over 6.84%, which is a massive single-day decline for a company of that scale. Interestingly, well-known Tesla bull Daniel Ives recently issued a cautionary note about the company's near-term prospects, an uncharacteristic move from one of the stock's longtime supporters. So, when Tesla suffers, and its biggest supporters start waving red flags, It's no surprise that smaller EV players like Lucid also feel the impact. Another fascinating dynamic in play today is the surge in short interest surrounding Lucid stock. A whopping 23.2% of the free float, equal to 282.35 million shares, is currently being shorted. To put it in perspective, that's an increase of 2.32 million shares in a single session. What makes this situation especially intriguing is the fact that there are now zero shares available to short in the broader market. This indicates that short sellers may be overreaching. They've piled into Lucid positions aggressively, betting that the stock will continue to fall. However, when everyone is leaning in one direction, a sudden reversal or short squeeze can occur. That's why some bulls are interpreting this scenario as actually bullish in the longer term. Lucid's initial green candle today, despite the market's weakness, likely caught the attention of these shorts. In response, they jumped in to suppress any potential rally. If they've overextended themselves, any positive catalyst in the near future, be it from earnings, an analyst upgrade, or even a broader market bounce, could lead to a sharp upward movement in Lucid's share price. Turning our attention to the options market, volume was relatively muted today. Roughly 277K call options and 87K put options were traded. Interestingly, 49% of the total options activity was bearish in nature. This nearly even split shows that market participants are still divided in their expectations. Bulls are placing bets that Lucid stock will rise above $2.50 in the near future, while bears believe it could fall below that level, possibly even toward the $2 range. This suggests that some traders expect additional downside ahead, while others are banking on a reversal. It's a classic tug of war, and the resolution will likely depend on broader market conditions and Lucid's own upcoming earnings data. Notably, large trades exceeding $100K in value were observed in the secondary market today. Some of these sizable purchases contributed to the early-day spike in Lucid's stock price. One significant sell order valued at around $110K was also recorded. Meanwhile, dark pool activity appears to be increasing. This could be a sign that institutional investors and hedge funds are executing trades behind the scenes, possibly trying to disguise their intentions. As of the close, Lucid is trading at $2.31, just below a critical technical pivot point at $2.33. If the stock fails to close above this threshold, we could see more downward movement in the coming sessions. Technical traders are closely monitoring this level, as it has recently aligned with Lucid's 50-day moving average, a key indicator of short-term momentum. Should Lucid fall below this point, the next strong support level lies around $2.11. Holding above this line will be crucial to preventing a more substantial sell-off. On the flip side, a breakout above $2.33, followed by sustained trading above the 50-day and 100-day moving averages, could signal a potential recovery. Currently, Lucid's 50-day moving average sits at $2.48, which is now acting as a ceiling. The 100-day moving average lies further ahead and would be the next resistance to watch if the stock can regain its footing. Since last week, either Thursday or Friday, there haven't been any updates or changes to Lucid's projected earnings per share, EPS, or revenue expectations. However, it's essential to continue monitoring these figures leading up to the earnings release. Analysts and institutional investors will be paying close attention to any changes in guidance or outlook. Today's price action can be categorized as a classic consolidation day. Although it ended in the red, there wasn't a dramatic sell-off. The lack of panic selling suggests that some investors are still holding on to Lucid in anticipation of a positive earnings surprise or a broader market rebound. To put things into perspective, Lucid's relatively moderate decline looks less severe when compared to other stocks in its peer group. Rivian, another EV startup, dropped by over 5.3%. Even tech giants like Nvidia weren't spared. Its shares plunged by around 5.19% in today's session. This relative outperformance could suggest that Lucid is starting to establish a floor of support, even in the face of broader market instability. While this isn't a guarantee of upward momentum, it does highlight the fact that Lucid might be weathering the storm better than many expected. So, the big question now is, what's your stance on Lucid Motors at this point? Are you considering buying the dip? Are you already holding shares and looking to add more? Or are you skeptical and planning to wait for more stability? Also, how do you feel about the ongoing Trump-Powell debate? Do you think Trump has a valid point in blaming Powell for the current market uncertainty, or is he merely deflecting blame to protect his own reputation? The relationship between political pressure and monetary policy is a complicated one, and your opinion might differ depending on how you view the Fed's independence. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel. Your support helps us continue to bring you in-depth market analysis. Thanks for watching, and I'll see you in the next video. Take care.